Jenny, how much enthusiasm do you have for NVIDIA today?
I feel like I'm the perpetually wrong person to ask about that because I always think it's overvalued. I always think this is the top. And by the way, no knock on the company and the wild success of that company. I just think that there's a lot of positivity baked into those shares. But again, you know, I'm a dividend manager who skews value, so consider the source.
Well, let's talk about where there's opportunity. And in fact, your word of the day today is opportunistic. Where are you finding opportunity and value?
So beneath the surface of this market, we've seen tremendous amounts of chaos. And one of the stocks that we just added to the dividend income strategy is Conagra. Stock's down like 9% almost since the RFK announcement was made that RFK Jr. was going to lead Health and Human Services. Why? Because he says things like McDonald's and Pepsi are poisonous. So what you saw in the past week and change was stocks like General Mills, Kraft Heinz, Smucker's, Hershey's, Pepsi, fast food companies, they all traded down dramatically on his nomination. Meanwhile, you've got a company like Conagra. We've been researching this for over a year, waiting for something like this to happen, knowing that we just couldn't be in 2024 without weird things happening, right? It's been such a chaotic year, knowing that something would knock this share price down. And you've got this portfolio that has things like Orville Redenbacher, Healthy Choice, Birdseye. Yes, they have Duncan Hines, but on average, it's a much healthier portfolio, but it got pulled down with the rest. So now you've got a stock with a 5.3% dividend yield. Yeah, sorry, go ahead.
No, go ahead. Finish that thought.
Okay. 5.3% dividend yield, trading at 9 times earnings. It should have, I don't know, 3-4% earnings growth ahead. I would expect a total return in the 8 to 9% range annualized for many years to come. And to me, that's really compelling in this chaotic landscape. So going back to your opportunistic, that's just what we're looking for. Things that are getting shaken out where the valuations are really, really compelling. And good news is not already incorporated into the share price. Nothing's incorporated into the share price.
Elon Musk's push for more government efficiency leads some people to think that there may be the eradication of certain departments, i.e. Department of Education, which then would lead to leases being canceled on government buildings and things like that. You're also looking for opportunity around some of that real estate.
Right. So one of the other companies in the portfolio is Easterly Government Properties, the ticker's DEA. And they own things like DEA buildings, FBI buildings, ICE buildings, EPA buildings. Super interesting. The stock was down nearly 20%, right, after the Department of Government Efficiency was announced, because there was just this broad brush like, oh my God, efficiency, they're going to take everything. The reality is they can't. The CEO went out on with Raymond James last week and then reached out to individual investors like us and did an amazing kind of mini roadshow saying, here's the reality of how government efficiency can really even work, how that's going to come through, and their portfolio specifically. So they've got like $5 billion of rental revenues to essential, truly essential government buildings. For example, their EPA building tests water. You can't just be like, okay, we're going to be efficient and like cancel the lease on an EPA building that tests water. You can't do that. So they're saying like, yeah, Department of Ed's at risk. That's real. We would not want to own the Department of Ed building. And I don't think he's saying this facetiously. He's like, that's going to turn into condos. Washington, D.C. needs places. But the DEA portfolio, the Easterly portfolio, is super, super safe. There should be nothing as a result of DOGE.